Next guest does say that this Friday's inflation data will likely shift the odds higher of a July and September rate cut, supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, head of research and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probably shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut, and really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah, 40% by the end of the summer.
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's, day-to-day, it could be noise, because last week you had the biggest down week for the NASDAQ in quite a long time. So I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation really changing at all? Do you expect any surprises on Friday?
One print can be uncertain, but I think the forces underway for inflation to fall like a rock are in place. The reality is there's a durables recession. It's in housing, and now it's in autos. That's like 60% of the CPI basket is in a decline until the Fed really injects confidence by cutting. And so I think there is urgency for Fed cuts to happen sooner. But at the same time, I think the effect on inflation is there isn't another incremental driver for new inflation. So inflation, I think, is going to surprise to the downside, and hopefully it's Friday.
Energy, same story. I know we've got gasoline futures lowest in a few weeks, and we broke 80 today on WTI. Brent's below the 200-day.
Yeah, I think energy's a tough trade in the near term, because as long as oil's under pressure, I'm not sure I want to be overweight energy stocks. And if there's drilling under Trump, that's downside pressure to oil. But over the next 3 to 5 years, I think energy is a great investment, but I think this year it's not really going to be the spotlight for us.
Alright guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today they talked a lot about the Russell 2000 and small caps. They also mentioned the S&P 500 and the NASDAQ. So we'll start with the S&P 500, guys. If this is your first video, the blue line is the 45-day moving average and the green line is the 200-day moving average. You can see I've also drawn a white trend line here where we've bounced off in November and then also in the middle of April. We have been on a textbook bullish run with higher highs and higher lows, and now we're starting to have a sell-off like we did back here in the middle of April and we did here in November. The first stop is looking like it's going to be that 45-day moving average. If we do end up breaking through the 45-day moving average, we should be able to get a little bit more support at this white ascending trend line. So as of right now, I'm planning for a pullback at least to the 45-day moving average. I wouldn't be surprised for it to come back and touch this white line, then consolidate sideways, and then keep going higher, guys. We are in a very bullish market. Same story with the QQQ. We have this white trend line we've touched back here in November. We also touched in the middle of April, and now we're on our way back down. The NASDAQ has actually made it to the 45-day moving average already and is still looking weak. So if we break this 45-day moving average, guys, the next stop is going to be somewhere around this ascending trend line. The NASDAQ does tend to go up a lot more than the SPY, and the same goes for when they're selling off. The NASDAQ tends to sell off a lot more than the SPY. But nonetheless, they're both showing similar patterns on this white ascending trend line that we've touched in November in April. So those are important levels just to keep an eye on for the NASDAQ and QQQ. On to the Russell 2000 small caps, guys. You can see the 2000 price target. We came up, made it a resistance right here, and ever since we've basically made it a support. It took about 6 months once we got back to this resistance to finally make it a nice support line. So we went from resistance back here to support right here. It was also holding that 45-day moving average. And look at the rocket ship move up that it got once it proved that this was going to be a support and no longer a resistance level. And Tom Lee is calling for another 40% from here. 40% from here, guys, would be 3,050 in the Russell 2000. Look at how parabolic of a move is being called for right now. And just in the next couple months, guys, it will be insane if this starts to play out. Remember, these are just my thoughts and opinions. I hope you guys enjoyed the video and the breakdown. If you did, smash that like button and subscribe if you haven't already, and I'll catch you in the next one. Peace.